do, do. Hey, what's going on, everybody? Welcome back. All right. Hope everyone had a great weekend. We are streaming live here on TradingView, and this is the TrendCloud Trading live trading room, guys. We go over analysis here of the futures market, forex, stocks, whatever you guys want to see. I will pull it up on the screen here and we will apply the TrendCloud process to reading the charts. And that's really what this live stream is about, guys. If you can read price action and you can understand what's going on the charts across multiple time frames, because that's the hard part, then you can apply any strategy that you want. And you can apply that strategy much more effectively. So if you can't read the charts, how are you going to apply a strategy or a system that you purchase from somebody out there? Okay. I'm definitely a big believer in discretionary trading, meaning I make the decisions for myself from what I see, and then become very mechanical and automated after the trade is already put on. Okay. So I think what we're going to continue to do here in the morning at first is go over the metals market, because the metals market opens up at 8:20 Eastern. I am here in South Florida. So let's jump over to gold and take a look at let's take a look at the opening range here and just read the charts. And you can see right here, let me pull up the opening range 15-minute. And we can see right here that we've got a breakout to the downside. Now, we don't look at this right away, right? We don't look at the opening range breakout right away. What we do is we start from the highest time frame, and then we work ourselves down to that. Okay. Let me bring up the YouTube over here. There we go. Let me bring over the chat. Okay, so we've got people in the live trading room, and we've got people over here on TradingView. Very good. I've got both chats up. Okay. So we'll start every morning with the metals market, because again, it opens up at 8:20, and we look at everything we look at is across multiple time frames. And why do we do that? Why is that? Well, when you're looking at multiple time frames, what you're able to do is you're able to gauge momentum and trend on that highest time frame and get a general idea of what's going on. So here we've got an uptrend on that 4-hour chart on the micro gold, and you can see the candles have turned blue, and that means we've got an extended trend. All right, so we've got an extended trend. There's 5 waves in an average trend. Once it turns into the 6th wave, the 7th wave, here we got 7 right up here. Now the trend is extended. So as soon as the candles turn blue, what we can expect is some sort of deep corrective move, okay? And this trend is in a corrective phase right now. Because look, on your cycle indicator, and this all comes with your TrendCloud day trading system, all these indicators work together as a system, okay? So on an uptrend, when it becomes extended, we're looking for this corrective move, and we're looking for signals and candlestick formations that are going to tip us off, right? And here we've got this huge rejection candle here on micro gold, huge rejection candle. And we are in a corrective phase. Momentum is also on our side. So we do have an uptrend with momentum coming down. So we do have this sort of thing going on. However, what gives us a slightly um, a slight edge, right? And that's all we look for. Our job as traders is to look for an edge and capitalize on it. But we have to be using a very objective process to do that. We have to be using an objective, back tested, optimized system to do that. Okay. And it's done across multiple time frames. And this is why. So when you're pulling back like this in an extended trend, we can expect that price will want to do this. Pull back below that line in the sand on the trend cloud. I am using the 50 simple moving average. If you wanted to, you can adjust that right here, 50 simple moving average. This is adjustable. Maybe you want to use a Fibonacci number like the 55 exponential. There you go. Now you're at the 55 exponential. Okay. So TrendCloud is completely adjustable for you to manipulate this and use it across any instrument that you want. Okay, maybe you find that the 55 exponential is a better line in the sand to use on the euro. I don't know. I mean, you would have to test that out. But it comes fully optimized for the futures market and for basically Forex and stocks as well. So when I was back testing this, these were the moving averages that worked the best for me. And if it worked well for me, it's going to work well for you. And I have the data on all of that. And if you want TrendCloud, I send all of that to you, okay, along with the masterclass. Oh man, that is good. All right. So extended trend, rejection candle, corrective phase pulling back. Interesting. Okay. Now it's pulling back into this high time frame trend cloud right here. And you can see how that correlates to the middle chart and the lower chart, right? So we're breaking out to the downside. We're starting to put all these pieces together now. So, okay. So we've got this uptrend, but it's extended. Okay. Rejection candle at this market edge. Okay. Pulling back in this corrective move. Momentum is down. So we've got a lot of force. There's a lot of force here to the downside, even though it's an uptrend. But there's a lot of force to the downside. So we've got some information here. We're breaking below. We're starting to break below the middle time frame trend cloud. So we could get a crossover here to the downside as well. So all of this information is starting to stack on top of itself, cycling down as well. Middle time frame CCI indicator, which stands for Commodity Channel Index, built specifically for commodities, is below negative 100. So all of this information here is starting to compound, okay? So I have to sneeze and I can't. Oh my God. All right, it's gone. It's gone. It's gone. All right. So on that middle chart and the high time frame chart, we've got a lot of elements. We have a lot of elements in alignment with each other. And that's the beauty of TrendCloud. TrendCloud is going to allow you to map out price action across multiple time frames and talk yourself through the trade just like that. All right. If you're not able to do that, are you going to be able to apply a trading strategy to your charts? How can you apply a trading strategy unless you can read price action across multiple time frames? And that's what TrendCloud does for you. Okay. So not only is it showing us these 6 elements, right? Trend, momentum, cycles, multiple time frames, support and resistance, and levels of imbalance. That's the 6th one, levels of imbalance, or what we call supply and demand zones. So just remember, supply and demand, support and resistance, different elements, okay? So all 6 elements are looked at by one of these indicators, right? Trend is used by our cycle indicator, and these are modified. This is a modified stochastic. This is a modified MACD that I built myself on PineScript. So momentum, cycles, trend, multiple time frames, right? Support and resistance is also located here on your TrendCloud indicator. Those are support and resistance levels. Momentum on the middle time frame is with the CCI indicator. All right. And then the supply and demand zones that we use, we draw out like this on our with that little box tool. Okay. And looking at the candles, and all of that comes in the course, guys. How to find supply and demand zones, how to draw them out, what they look like, what they are, what a consolidation pattern looks like. Okay. So we do all of that in the course, and that all comes with your TrendCloud system. Okay. So let's erase everything here and take a look. So now we know that we've got all of these elements pointing to the downside here, right? We don't have the crossover yet. So what's happening here is we are now breaking out to the downside, right? We're breaking out to the downside here on the opening range. Does that make sense? Kind of does, right? It kind of does. It makes sense that we're breaking out to the downside, because look at all of the elements that we have here pointing down. See that? So when you've got this on your chart, you can really see, oh, okay, yeah. Hey, we're just starting to cross below the 50 simple, we're in a corrective move in an extended trend on the high time frame. All right. So that is why we are breaking out to the downside there. Now, where is this thing going to go? Can we get in on this? Yeah, we sure can. Okay. Now take a look. We're breaking out right here. Okay. Breaking out right here as well, right? Of the opening range, and we're breaking structure. Now we are pulling into right here. Okay. It's just hitting it now. We are pulling into this rally base rally that broke structure right here. So this is a demand zone. So what could happen here? What we're looking is we're hoping to see something like this, a pullback into this supply zone and opening range, okay, and then a move back down to here, hopefully breaking through. That's what we're looking for. So to do this, how do we get in? How do we get in on this trade here? Well, we can do something like this. Okay, can do something like this. Now we are still in an uptrend, so this would still be considered a counter trend move, but we're hoping to ride that momentum and the fact that we're in an extended trend on the high time frame, right? We are expecting, or we're taking a chance on this extended trend and this deep pullback below the 50 here. All right. Now, is it going to do that? Well, we don't know. We can only try and find a slight edge somewhere in the market and try to capitalize on it. So how do we do this? Well, why don't we take Fibonacci? Okay, this is making a really nice move to the downside here. Let's grab Fibonacci and go from swing high to swing low. That's where it's at right now. And you can see if we do in fact pull back into this area, look where that 618 retracement level is. Okay, so we've got a 618 retracement level, 786, 886, and then finally the previous day's close right here. And what we would do is we would just keep bringing this down as far as this is going to go. And that's going to give us some sort of resistance level, extra resistance level to take this thing short. All right. Now, do we really want to be shorting gold right now? I mean, everybody seems to be buying gold, right? So I think there's a lot of people that might be buying the dip on gold, and you'll never know. You'll just never know what is going to happen. All we can do is put our process in place and find an edge and take those trades. That's all we can do. We can't go predicting like or guessing, or we just have to trade what we see. That's all we can do. All right. So if we do start to get a reversal here back up into this area, then we could try to get in on this. If you want to take the top, if you do want to take the top of this previous day's close, as this pulls back in here, you can take the previous day's close and you can put your stop loss right above the previous day's high right here. There's lots of ways you can go at this. You can take the supply zone itself right here. Okay, you could take that supply zone itself. We got to reduce our risk. Now, we always assume a $20,000 account. Always assume a $20,000 account. And 213, that's too much. That's over 1%. That's over 1%, right? We have to keep it just under 1%. Okay, so we can do something like this. Maybe bring this up to the 786. Okay, and reduce our risk even more. So we've got two contracts here. We're looking for a 786 retracement. So it's going to look, our setup is going to look like this. It's going to come up to there and then make a move down. Okay, now we got to move this down a little bit. And we're still pretty much at that 786 retracement level there. Okay. So there you go. That is how you would set this up. I'm loving the fact that this is looking like it wants to break through this level. We really do want this to break through this demand zone. That's going to give us even more of a condition to take this trade, or reason to take this trade. Okay. I'm going to post the trade plan here that we're using. Let me just post that into both chats here. There. That's the trade plan that I'm using right now. Okay. All right, let's move over. Let's keep going. Let's go over to silver. Okay, here's the micro silver. And what do we have here? Okay, so check this out. Look at how at this point in time, at this particular moment in time, right here, we had an extended trend on both the high time frame and the middle time frame. And what did we do? We made a really nice move all the way down to that line in the sand here. So that 50 simple moving average acted as support on the middle time frame. And now what's happened is it's recalculated because that actually closed below. Yep, it just closed below here and recalculated, and that's why it's painting a 1 at the top on that middle time frame. But again, huge rejection candle right here. Doji candle on that high time frame. This is a doji candle. It's a neutral candle, but in this particular case, you can see the rejection. There is a huge rejection here on the top. So that is a very long wick. All of those sellers came in this area here. So let's just mark that off. Okay, right there. That's where all the sellers came in and pushed that sucker down. So again, very strong breakout to the downside on that opening range for the micro silver as well. And right here, hang on, guys. So right here, we are getting that crossover. So we got the crossover on the middle time frame. TrendCloud is showing us, hey, all of these elements are pointing down. And in this particular case, we have the crossover as well on the middle time frame TrendCloud. So we're still riding this corrective move back down here below our line in the sand. All right, that's where price likes to go. Okay, right in here. This is where price likes to go to recalculate and to refuel. This is like a car light going on when you're driving down a road and you're just going for miles and miles and miles, and the car starts to run out of gas. Well, you got to pull into a gas station to fill up, and that gas station is located below the 50 simple. All right. So very, very important stuff to learn in order to apply a strategy. What strategy are we applying in this trading room? The retest of the opening range. That's the strategy that we do. Why do we use that? Is it because it's the best and it just makes millions of dollars? Well, it can make millions of dollars if you have the account size to handle that, but it's on the chart every day. And that's why I like using the opening range breakout. One of my mentors taught me this, and so that's what I do now as well. And because this is on the chart every day, specifically for the metals futures market and the index futures market, we can apply this strategy very effectively and very precisely to the TrendCloud mapping system. All right. Okay. So let's see what we got here. Let me check something out here. All right, there we go. Now we've got some more bars. Looks like we weren't getting the best reception there before. I hope everybody can hear me. I hope everybody can hear me and see the live stream. Okay, very good. All righty. Anything you guys want me to look at, just let me know. Let's go. Let's move on here. So silver, again, same thing. Same thing on silver, right? We're looking for this, and we've got a lot of resistance here. Let's just box that out. What does that look like? Okay, I'm liking that. I'm liking the way that looks. All right. There's our silver's a little bit more expensive, right? Can we handle 2 contracts? No good. That's over our limit, right? So we got to keep it here. We've got to keep it here. We can use one of our support levels. There we go. Now we can have 2. Now we can have 2 contracts. Okay. Let's get rid of all this. And now we're set up on silver as well. In fact, I really like how this stop loss is above this rejection candle here, and that the entry is in alignment with the middle time frame trend cloud. All right. And what are we hoping for? We're hoping that this pops back up to here, okay, gets us into the trade, and then gives us a nice move down. So we're just looking for, we're looking for little resistance levels, right? And if this does pull back on the 15-minute chart, you can see the trend cloud is actually in here. Okay, it's actually in here. And I have a feeling, because this is so strong, that we're going to want to be somewhere in here, but it's going to be too expensive. It's just going to be too expensive. So it's going to have to pull back pretty deep. So, if we miss this trade, fine. If we miss this trade, don't worry about it. You must pay attention to this number right here. Okay? See where it says 170? This is your risk, your stop loss. This right here, my friends, that right there, that is your best and most important number on your chart. Okay, that is the most important number on your chart. Here we go. Yeah, not this number. This number right here, everybody loves to look at this number. Everyone loves looking at this number. But this is the number that makes you money, actually. This is actually the number that makes you money. And the reason why I say that, fail, right? We did everything correctly. We did everything properly. You are doing everything correctly, especially if you have the course and you're following it. You're doing everything right. So if the trade fails, is that your fault? No, that's not your fault. It would be a disaster, and it would be your fault if the trade failed and you did something like this and you had this fail. So then you would take a $600 loss, okay, and wipe out a whole bunch of profits, probably for the last couple of weeks for sure. Okay, and you'd be in a world of hurt. All right, so this is the number that keeps you alive. This is the number that keeps you in the game making money. Remember, when you have an edge in the market, like if you're using TrendCloud, you've got an edge in the market. So that makes you the house. You're the house casino. And all of these candlesticks, they're playing in your house, okay? They're gambling in your house. The rules are set up for the house to win in the long run. That's the game you're playing here. And I don't like to ever refer to gambling or betting, or that's not what we're doing here. Okay. We're not guessing at this stuff. We're using a very specific set of rules and an objective strategy for reading price action. Okay. So that's very different. That's very different from gambling. Okay. It's not like roulette, like, oh, I think it's going to be 27 red, that's not what we're doing here. Right. Okay. So look, we've got that set up on silver. Let's go over to copper. Same thing on copper, right? Let's take a look at, copper and silver. See the difference on gold, guys? Do you see how copper and silver are the better trades? Because with gold, we don't have the crossover yet. Let me erase all this. Okay, we don't have the crossover yet on gold, but we do have it on silver. Come on. Right there. We've got it on silver and we have it on copper. All right. We got it on silver. We've got it on copper. And that's going to make these trades here the better choice, right? Now, what I don't like about copper, okay, unlike silver, is that copper is still in a strong uptrend. So copper's in a strong uptrend, and silver is extended. Silver and gold both have extended trends, and that's what we're going on. Wow, look at this. This just sort of left the building here. Big downward move on gold today. All right, so we're really pulling back deep. We could be pulling back into this high time frame demand zone here and just going right through it. So, today might be a day where we just don't ever come back. It might end up doing something like this. It comes down, hits one of these levels here, and does a pullback like this, and then down some more. That's what I've seen happen a lot. For it to come all the way back up here, that's quite a tall order. That is a tall order. Okay, that is a tall order. Platinum. Okay. Platinum is starting to break below and get that crossover. We've got the crossover here. And look what happened this morning, right? It broke above. It broke to the upside on that low time frame there. Look at that. Look how it broke out to the upside and pulled right into this area here. Right? That's a bull trap, right? Pulled right into that area and then ripped to the downside. Okay. So we broke structure here. I think we're going to have a huge down day in the metals market. All right. It just ripped through all of that. And now we're coming into this right here. So we've got some demand here. And this might bounce back and forth on platinum. And that's what it's been doing, right? I mean, that is what it's been doing. This is a sideways market. So, you know, we could, and we're looking at this. Okay, so we could look at it like this in a sideways market. That's what we're looking at right there. And it's been doing that for quite some time. It's been doing that for quite some time. And even tighten it up, bring it right to there. So we are definitely sideways. Swing high, swing low. Okay, we're right in the middle. What do you do in this situation? Well, look what it did. Broke to the upside, hit supply, ripped all the way to the downside. It's hitting demand, and it might just bounce back and forth. Hey, good morning, Kazi. Good morning. So this is the situation. That's the situation, kind of, you know, on platinum, right? Looking like it wants to do something like that. Can you trade that? Yeah, sure, you can trade that. You know, it could be as simple as just looking at previous data and saying, "Oh, okay, well, I mean, why don't I take a chance on that?" Now, mind you, if you take a chance on this, right, you just buy down here. If you take a chance on this, there's your 1%, right? Yeah, you can bring it right in the middle of this thing. And every time it comes down here, you know, every time it comes down here, you just simply take it back up to here. Just like that. You know, you can definitely play it that way. And then your target would be there. Right? Less than 1% risk. Nice reward, right? Asymmetrical leverage. Asymmetrical leverage. So, what's the downfall? What's the downfall of this? Yeah, we've got a sideways movement, and in a sideways in a sideways trend, all of this stuff here kind of goes out the window, doesn't it? Because by the time you cycle down and your momentum is all down, it's turning up. So in a sideways trend, all of your strategy, your trend following strategy, sort of goes out the window. And let's try it. Let's try it. You know, it's a less than 1% risk. Okay, you've got the previous day's low down here. Right, for the past. Right, this is where it's been for quite some time. Right, that's where it's been for quite some time. Will we make it? No. If we want to be below if we want to be below that structure, we'd have to take it right there. We'd have to take it right there if you want to be below that structure. But this is where it's been going. So, how do you handle this? Here's all the rejection, right? It seems to come right here. There's all the rejection there. And you would just have to say, all right, adjust everything so that you're at least below, right there. You don't know. It did it here, right? It came in here. It came in here. Here's a $200 risk. Came in, went all the way back up to 780, right? So you risked 200, you made 780. Here it pulled all the way down, hit, went all the way up again, So this move was worth 780. This move was worth 780. And this move was worth 780. I mean, right? It's it's as simple as that, right? It's as simple as looking at the history and saying, wow, look at that. This thing, pulled into this general area here, hit once, 780. Pulled back, hit that entry again, pulled back, 780. 780. So finding a sideways market, that's really all you're doing. You're just looking at that. How else can we refine that strategy? By using TrendCloud. How can we refine this strategy and make it a little bit more effective across multiple time frames? Well, that would be your stochastic here. That would be your TrendCloud cycle indicator, right? So let's say we see this move. It makes this really nice rejection candle in a sideways movement and then pulls all the way back up to here. Hits that hits that supply zone and starts coming back down. Now we're back in that same area here. When can we start looking at this? Well, let's take a look. Let's use a vertical axis here and just follow this thing down, right? Hey, how come it's not on my... Oh, here it is. Okay. All right. So right here, cycling down, and right here, it starts to cycle back up. Okay, we haven't hit that area yet. This is the candle right here that hits. So we pull down, right? We hit this demand zone, and you can see the cycle indicator is starting to cycle up, right? We're up, cycling up. You can even put it on your lower time frame. Okay, that's cycling down. Right here is where we're starting to cycle back up, right? And what happens? It pulls up and then comes back down. So you catch the next cycle, right? Up, pulls back into the zone, and then starts to cycle up. So lining up your cycle indicators on all three time frames, cycling up, cycling up, cycling up. That's how you could catch the move back to the upside. So where would we take this trade? Oops. Right there, right? Right above that candle that formed the cycle to the upside. right? That's a nice bullish candle here, right? Nice bullish candle here that formed inside the demand zone. And here's the candle that formed that cycle up. Great. Take it one tick above, and there you go. And there's your move. So what would that look like? It would look like this. There's your entry. Whoops, didn't mean to do that. Sorry, guys. Did not mean to do that. Here's your entry right here, and your stop loss. Your stop loss would go right below that candle. Right there. And there you go. Nice move back up into supply. Comes back down. Do it again. Breaking out to the downside, coming back into this area. Great. Let's wait for it. Let's wait for it to be in this area and then start to cycle back up. But in a sideways trend, again, your momentum, your momentum filter in this process sort of goes out the window. So you've got trend and momentum that don't become a factor anymore. You know, those two elements of the process that goes out the window in a sideways market, sideways trend, right? Okay. Here we go. Oh, very nice. So let's set an alert. Let's set an alert here. Crossing down. Platinum. Looks like it's going to do it too, doesn't it? Platinum looks like it's going to do that. Another technique is you can take the bounce, right? As soon as it hits, as soon as this candle, let's say this candle comes down and just does this, right? Let's say that's the wick of this candle. Well, then what you could do is take the trade right there. One tick above that candle, put your stop loss one tick below that candle. And when it comes up and hits that line, that entry point, now we take it back up to here. And that would be your target. All right. So let's see. Let's see here. Let's go over to the micro. Oh, wait. We need to do oil. Let's go over to oil. Yeah, look at that. Boy, oh boy. I knew it, man. I knew they wanted to push oil back into, close to $70, and that's where it's heading. That is where it's heading. Downtrend, downtrend. Still in the middle here. Okay. So we are still in the middle. Starting to another push down, and we're going to be extended, right? Now that would be great. If we can get another move to the downside here in the next couple of days, and get this back down to 70, we'll really be extended here. See that? Back down to 70. Breakthrough structure. Breakthrough structure. Extended. And that's when we're going to start to see double bottom, break of structure there. And then we start looking, right? Then we start looking for those zones. That's always the pattern. That's always the pattern, guys. All right, so we're going to break out to the downside on crude oil here. And everything is pointing to the downside. High time frame, demand zone. It's already in there, right? So the fact that this is low on the curve, this is in a level of high time frame demand, it's looking like that's looking like that's probably why this thing is not breaking out so forcefully. It's kind of just going sideways there. Okay. Yeah, I kind of figured, Kazi. I kind of figured something weird is going on. I didn't see too many people in the chat there asking questions. Yeah, check it out on check it out on YouTube, and let's see what the heck is going on. Let me try to reload here. Save and reload. Oh, let's save everything. Hopefully that helps. Hopefully that helps. Okay. Well, let me know, Kazi. Let me know if I kind of knew something was up. I kind of knew something was up. What is going on with TradingView? There you go. Any better, Kazi, on the live stream on YouTube? Is it looking like legit? Any lag on YouTube? All right. Wow, that is crazy looking. Okay, so here we go on the micro S&P here. Much better on YouTube. Okay, yeah, I've got to figure something out. Eventually, the live stream here, this will be part of the live mentorship. And when you log into your TrendCloud membership area, you'll be able to just click a button and it will go right to the live stream. And I'll be doing everything on Zoom because that seems to be the best way to do this. So, yeah, or just keep it on. Just keep doing it on YouTube because it records everything just fine. All right, so micro S&P here. Micro S&P looking good. We had that extended trend. It pulled back, recalculated, and now we are breaking out to the upside here. Let's get back to that 15-minute chart. Okay, starting to break out to the upside. Strong upward movement. Momentum is still down, but we did break out to the upside. We've got this deep pullback, And this level held. This level here definitely held. And that is the situation we are looking at right now. Much better on Zoom. Good. Okay. Awesome. Switched over to TradingView. Okay, yeah. Much better on YouTube. All right. Let's see here. So, what we've got going on here right now is we've got two uptrends, right? Uptrend on the 4-hour chart, uptrend on the 1-hour chart, starting to break out to the upside. That all makes sense. But we're still cycling down, and momentum is down on these two time frames. So we've got some mixed signals. What do we want to see to really take this trade long? We want to see a little bit of we want to make sure that we cross back above our line in the sand here on that middle time frame. And we really want this, right? That's what we're looking for. We want to be above that positive 100 line on the CCI. We want to be above the trend cloud on the middle time frame. And then we can start looking at this. So this thing has to do something, like this first. That looks like a mess. So if we do get the breakout here and we break through some structure, we probably won't have the momentum as of yet to really take this confidently. But if it's a really small risk, just from here to here, depending on the risk that you take, but we would have some pieces of the puzzle missing. That's the thing. So it might not even get to this point, right? It might not even get to this point here. It might just continue to break out to the downside and do something like this. Because all this momentum is on the side of the down, right? This is all downside momentum in an uptrend. It's just mixed signals. Just mixed signals. Now about the Dow. My goodness, the Dow is super extended. Super extended. When is that thing going to wow. So this is really this 11 should actually be like up here, right? This is the 11th wave up. This 11 is right there. 11th wave up on the high time frame. Third wave up on the middle time frame. So the potential for this to go, 5 waves is there, right? 3, this is 4, 5, pull back, double top, break below. That's what we're looking for. So we would have to rip through all of this resistance. All that resistance, we'd have to break through all that. Zoom is much better. Yeah, Zoom is much better for sure. That's all on the way. That's all on the way. I think it would be best to do that. There's a lot of people that kind of are watching the Trading View live stream and getting introduced to TrendCloud and stuff. So maybe like the first hour, or whatever. We have to start cutting these down to an hour just to maintain the integrity of the video for the recordings. But yeah, that will all be on in the membership area. I'm working on that now, actually. Okay, NASDAQ. Let's go micro NASDAQ. Clear the chart. There we go. So micro NASDAQ, we've got this downtrend. Momentum is down. So the NASDAQ is looking like a better downward short, right? These signals are all in alignment with each other now. Unlike, the Dow, which is still up, and the S&P, which is still up. The NASDAQ, we've got down, breaking out to the downside. So this looks like the better move. This is definitely the better move. Broke structure here, broke through the 100 simple. All right, we broke through all that structure. Box out the trend cloud on your middle time frame. And that's all the way up here. So this is a bull trap, isn't it? Right here. There's your bull trap right there. Previous day's open. That's a really nice risk to reward right there. Breaks out, sort of makes this double top sort of move, right? And breaks through. That's definitely a supply zone. Rally, base, drop. Right up in here, this is where all the sellers came in. And it's inside of that middle time frame trend cloud. Right in there. From here to here. Kind of, that looks right. That looks right. I like that. Russell. Now, Russell, that's quite different, isn't it? Uptrend, breaking out to the upside. Okay. Cycling down, momentum is down. Cycling down, momentum is up. Okay, so we've got momentum on our side on the middle time frame, but not quite on that high time frame, which leads me to believe, if you're reading the price action, it's saying cycling down, momentum is down. That means it wants to do something like this and pull back into this area here to make another move up. That's what the high time frame is telling me that it wants to do. So we're not in alignment with that story yet, right? Those stories aren't matching up. High time frame is saying one thing, middle time frame is saying another. Those stories don't match up. All right, let's go over to Let's go over to the 10-year note. Mixed signals, right? Uptrend, uptrend. Momentum is down, and momentum is right at that negative 100 line. Nothing there. Mixed signals. Uptrend, downward momentum, just starting to cycle up. It did hit the cloud. See how this came in and it did hit this high time frame trend cloud. Didn't break past the middle time frame trend cloud, and we're just starting to cycle back up here. We're breaking through structure. That makes me more confident with this right here, doesn't it? That makes me more confident with that. There you go. Same thing. Little weaker here. See how we crossed that negative 100 there? So I'm liking the 10-year better. Oh, the 5-year, I should say. What's this? This is the 10-year. Cycling up, breaking through structure. You've got it here as well. You've got it here as well on the 10-year. But not on the 2-year. Same thing. U.S. Treasury bond, it did break below. A little too much momentum. Cycling up, broke through, did right there. It broke through the negative 100 on that CCI as well. Okay, soybeans, downward trend. Okay, momentum down on the middle time frame, but we are pulling up, cycling up. So the context of this trade here on soybeans, you really want to follow this. You really want to follow the context of that high time frame, because we're cycling up in a downtrend. This is a corrective move. Momentum is on the side, okay, the high time frame side. So we could have a pullback into this area here, which is pretty legit on that middle time frame. And what do we have? Rally base drop and drop base drop. That's what we've got on the middle time frame there. Downtrend, pulling up into supply. Momentum's on our side, right? It pulled back deep. And when we pull back into this area here, if we pull back into this 15-minute zone, we could see something like that. Okay. If we pull back into this zone, then we're above the trend cloud. Okay, we're above the trend cloud, and that's going to definitely bring us above positive 100 on that CCI momentum indicator. So you can take a confirmation trade there maybe, but then you're going to have momentum and momentum on 2 time frames that are against you. No good. No good. corn. Okay, extended trend on the middle time frame. Just crossing over. We could be seeing time frame crossover here. We're extended, maybe double top, deep pullback. We need more information. We need more information. We need to see this starting to turn up. Cycle indicator's got to be turning back up. Momentum's got to be turning green again, right? We need to start seeing more information. Just let the system tell you when everything is lined up. Okay, we're not quite there yet. Wheat, really extended. Holy cow. We are really extended. That means that the demand zone that we're looking for is under here. Drop, base, 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 rally, right in here. That's what we're looking for. The Swiss extended trend, high time frame. Momentum is just starting to turn back up, but we're extended, right? So we really don't want to be going long just yet, right? On that Swiss, we've got a real sideways movement here. Okay, so remember, I think this live stream today is going to be dedicated to what happens, during the sideways movement or sideways trend. Your momentum indicators just go out the window, right? Momentum and trend in a sideways movement, those two elements aren't a factor anymore. So in a sideways movement, you're really going from extreme low to extreme high back to extreme low. And that's what we're looking at here on the Swiss franc. So how do we do this? Well, we're heading back up to here. Okay, we're heading back up to here. So what we could do is wait for price to get back to here, and then start looking for that, for that cycle indicator, right? It's going to do something like this. Wait for that cycle indicator to hook back down and start turning red on that lower time frame, and try to line up all the other cycles, right? Try to line everything up. So you can do like this and say, okay, we're in this area here, right? Price came up into the zone, and now we're cycling down, cycling down, cycling down. Great, take the trade. Okay, so your cycle indicator becomes a very useful tool across multiple time frames in a sideways trend or a sideways market. The euro, what happened on the euro here? Let's see, clear the chart. Downtrend, cycling down, momentum is down. Wow. We've got some alignment, don't we? Now this is aligned to the downside. Where's this thing going to pull back to? Oh, right in here, right? And look at how this is the very bottom part of your trend cloud on the high time frame. What else do we have there? Major level of resistance, right here. The 100 simple right there. Inside of a consolidation on the 15-minute chart. Pretty cool. Okay. Grab Fibonacci. Swing high to swing low. And now we've got some levels to work with in there. 786, 886 retracement level. Well, looking good. Go right to that 886. I like that. We're early in this trend. Okay. Middle time frame. If we make one more move down, it'll be in the fifth wave, but we still have asymmetrical leverage here, don't we? We still have asymmetrical leverage. All right. Looking good. Japanese yen. Uptrend. Cycling down, momentum is down. Cycling down, sort of getting stuck in here. Platinum is making a move, apparently. Let's take a look. Platinum, where'd you go? Oh, gotcha. Okay, right. Platinum making a move. How far down is this going to go? We don't know. We don't know how far down it's going to go. But it is starting to, we do have a little bit of a cycle going on here, right? We are crossing below. Wow, that happened real quick. We didn't even see, platinum is very expensive. So for us to just take it here, right? We would really be at our, oh man, we could have just planted it right there. Dang it. Okay. Maybe we'll get it. Maybe we'll get it here, guys. Maybe we'll get it here. Maybe we'll get it here. So we got alerted. Sideways movement, starting to cycle up, right? Starting to cycle up here. But we don't have it here yet, right? We're not lined up. In fact, momentum is shifted. Well, I mean, we're sideways, so momentum is really not shifting here. This might go deeper, but we can take a chance. We can take a chance on it. Can take a chance on this sideways movement here, okay? I think what we're going to see here is something like this, right? We're going to see a little crossover, right, on K. You'll see that percent K sort of does like a triple cross, triple cross to the downside. Whoops. Because in this situation, by the time it gets down here, it's ready to reverse back up, right? In that sideways movement. Just erase all of that. All right, so let's see what we can get here. All right, we're going to let that play out. We will let that play out. British pound. British pound extended to the upside. We're also still sideways. Sideways, sideways. There we go. There we go. Sideways movement, same deal, right? Same deal. Now here we are cycling up in that sideways movement. So we would be taking it from extreme low back to extreme high here. And that is the story it's giving us. So until we get a break of structure, we're in this sideways movement. Your momentum filter goes out the window, and we are starting to we're starting to look at this as a sideways pattern. So this is really interesting. This is a really good day today for sideways strategies that you can put into play the same exact way you would do with your trend following strategy, but we're reading price action in a sideways market, taking sideways trends, and that we're going to do simply by the structure of the candles. Okay, this is ZFH, platinum ZFH, pulled back. Okay. All right, so we got into that 5-year note as well. Uptrend, uptrend, cycling up, cycling up. Okay, we're above positive 200, really deep pullback. Okay, went down, hit that line, and bouncing off of that line there, that negative 100 line. And we just got this real funky looking uptrend here on the 1-hour chart, right? Went right through, ripped right through it. Platinum ripped right through. Platinum ripped right through that zone there. So it went through the zone, deeper into here. Can we take this to the upside coming out of this zone in more of a confirmation entry? Now you can see momentum cycling down. This has more to go. This definitely has more to go to the downside. And when this starts to hook up and this starts to hook up, well, then we can start taking the trade again if it lets us. But in a sideways movement, you just have to be more aggressive, because by the time it makes the move and starts to move in the direction, you'll Like by the time all of this starts to hook back up, you'll already be up here. Okay, that's the dilemma. That's the dilemma. Pushing through. Let's go to the 5-minute. Okay, we can start watching that and seeing if we can break some structure here on that 5-minute chart. Give us some sort of signal. Now here, by the time it breaks structure here on the 5-minute, we're pretty close, right? We're just pretty close to that area here. Making a really strong move to the downside. Wow. Wow. But look at that rejection from up here. Where is it going to? Uptrend, hooking up, starting to hook up. Momentum is down on the high time frame, but we've got an early uptrend. Right in here. Pulled back in as well on that 10-year note, 10-year, 5-year, same situation, right? All in the same situation. British pound, sideways movement. Man, oh man, look at that. Down, down, down. Momentum is down. Extended trend, pulling back below here. We really want to see some sort of break of structure to the upside to get in on that. Australian dollar, we're waiting for the same thing, right? Extended trend, we really want to see this pullback. We really want to see this pullback into this area here. So will that hold? That's the question. Is that going to hold? Is that demand zone going to hold for us? To make the move up. But we know that this is going to break below that 50 simple on the 4-hour chart. We are going to break below the 50 simple on the 4-hour chart. So we're kind of waiting for that. We're kind of waiting for that to happen. Canadian dollar also extended, right? Now this would be so nice. Now on the Canadian dollar, look at that asymmetrical leverage there. This thing has to come down to here, right? This has got to come down all the way down to here at some point. So if we get the crossover on that middle time frame, then we can start looking to go short and catch the move lower here. But we need that crossover to take place first. Mexican peso, downtrend. There's the crossover, right? We got the crossover on the Mexican peso, and we've got a nice zone that formed right here. Right? So this pulls back up into here. Right? We don't know which one is going to work. We only know to follow a process. We can only follow a process and look for trades that have an edge. Getting a nice rejection candle there. Another few seconds. Ten more seconds, that candle will close. And we want to start seeing some rejection out of this area. All right. I'm going to record this. Took platinum trade, 5-minute TrendCloud hour day. Oh, nice. Oh, nice, Kazi. Nice. Awesome. Awesome. Took the TrendCloud signal on platinum down for a 2-to-1. Second contract target. Beautiful. Beautiful. That's the way to do it. Downtrend, downtrend. Momentum is down. Kazi took the signal. Right there. Boom. Beautiful move. Yep. So, right, it's like, which one do you take? Well, so Kazi took the signal that was more in alignment with the trend and momentum, right? So downtrend, downtrend, downward signal here, cycling down, momentum is down, right? That actually makes a lot of sense, Kazi. So taking the signal in that condition worked out, whereas I went for the sideways movement, and that's a really good lesson, you know. So the signal that worked was more in alignment across the multiple time frames, where what I did was I took the sideways strategy and said, okay, well, you know, we've got this sideways movement, and we even have lower lows here, right? Don't we? I'm just seeing that now. Lower low, lower low, lower low. So good job, man. Yeah, really good job. Money in the bank. Money in the bank, Kazi. So that was good. That was excellent. That was excellent. So you can see how one strategy worked and one strategy failed. So I used a sideways strategy to go from extreme low to extreme high. Kazi used the TrendCloud strategy, where he took the signal that was more in alignment with the multiple time frames, and that's the one that worked. So for this trade, that strategy worked and the other strategy failed. So it all depends on what you do. One is not better than the other, or wrong or right. You know, if my trade worked out, everyone would have been like, oh, that sideways strategy, that seems to be the way to go. You know, you never know, right? You just never know. So you could have done both, right? You could have taken both, 1% risk, 1% risk on two different strategies. The main thing is, guys, when you can read the price action, like Kazi read the price action because he went through the course and he's got the system, and he's looking at this thing and he's saying, okay, well, I'm gonna do this strategy, and it worked, right? And so that's how trading works, right? That's just how it works. One strategy may work, the other strategy may fail, but it is a strategy in itself. And as long as you're reading the price action, as long as you're reading the price action, you can apply any strategy to it way more effectively. Okay, way more effectively. So great job, guys. What is this? ZNH? Oh, ZNH is moving down. Okay. So again, um, 2 stop outs for Chris. Looks like this thing is going to plow through also. Breaking below, right? Cycling down, momentum is down. We're trying to take this thing long because of the trends, and it's just not ready yet. It's just not ready yet because uptrend. Okay, we like that. But now momentum on that middle time frame is starting to cross below negative 100. So we took a trade on something that was pretty good, but not great, right? It was pretty good, and now it's starting to be terrible, right? Because it's breaking below that negative 100 line. It's breaking below that negative 100 line, and this thing is could it turn around? Yeah, but if the what is that? If that 10-year failed, most likely the 5-year is going to fail in that respect as well. But it is pulling back, right? So it's pulling back. It's just pulling back deeper. All right. This thing just wants to pull back deeper. Where is it going to go? It's going to go somewhere inside of this trend cloud here. Somewhere inside of this trend cloud. And then do something like that. Okay. On this move, we want to see that, right? We want to see a hook up. We want to see this break above positive 100. This is going to hook up. This is going to hook up, right? And then we start looking for the move inside some sort of demand zone to the upside. All right. So, okay. So hopefully some people took some TrendCloud moves there. I tried to do a sideways trend strategy. That failed miserably, but that's how it works out. That particular trade failed, right? Whereas another sideways movement trade might have worked. So the next sideways movement trade on platinum or the 10-year note, that might work, right? You never know when it's going to work, when it's going to fail. Just like that flip of a coin, you can flip the coin, usually comes up 50-50, but you never know the sequence of heads and tails, right? You can use a mathematical formula to calculate the average amount of times heads comes up, but you'll never know the sequence of heads and tails. And that is the moral of the story. So I'm going to call it here, guys. And I will see you tomorrow at 9 a.m. And we'll take a look at some more sideways strategies and try to line those up a bit better with TrendCloud. And we'll also look at some sideways strategies and see if we can find some more trades like how Kazi took them and take those TrendCloud signals that look like they're more in line with those 6 elements that we use in that TrendCloud process. So great job, guys. I'm proud of you. Good lesson today in sideways movement, taking trades that are more in alignment with the TrendCloud process and making sure everything is lined up on those multiple time frames. That's the name of the game, guys. Lining everything up on those multiple time frames. So great job today, guys. I will see you all tomorrow.